Now, in order to prove the concept, you see the operations is here, but it shouldn't be appeared. So I click close. And now, as you notice, the assigned purposes for this hierarchy is not being shown. If I refresh it, now you see that is added as part of a procurement and internal control. You can have multiple policy purposes to be added in here. So up to here, we made the organizational hierarchy and we explained very high level in regard to the policy. But in order to wrap up this conversation, we have to see how does it work. I jump the gun, I go to the procurement and sourcing, even though I haven't set up anything, is irrelevant. I can set up the policy early on. There is a menu item called policy under the setup. And if I go to the purchasing policies, you notice that this is shared across legal entities. I can create a brand new one. For example, I call it SRHQ, and that would be purchasing policy. Just shorten it. You notice a few things. There are so many different rules out of the box. So it would be beneficial as a functional consultant to get acquainted with these policies first, understand it, practice with it. And then when you talk to customers or your colleagues in a company, you could benefit from existing policies out there. But prior to that, let's take a look at the policy organization, and that would be interesting. As you notice, by default, there is an organizational hierarchy called company, but that is causing another conversation here. As you notice, if I go back to organizational hierarchies in a different tab, you don't see company here. They are alphabetically listed. So what is this company all about? That's a built-in hierarchy that Microsoft automatically gives you and you have no control over. And any legal entity that you're making automatically will be included as part of this specific hierarchy. You have no control over this. So that's a given. And for those people that are not familiar with creation of organizational hierarchy or purposes or whatnot, automatically you could just go create a policy based on a legal entity and get it over with. So Microsoft made it a lot easier for people with lack of knowledge in regard to hierarchies and purposes out there. As you notice, those two hierarchies that I've added it in here, they're not being shown. So what do? There's a parameters here, and as you see, the hierarchies that I've picked up as part of my session are being listed here. There are candidates to be chosen for this policy. So I can pick and choose both of them or one at a time. Again, that's one of those specific graphical bug that should be fixed. I add one at a time, let's say. And then pretty much you notice that you can have a precedence of order. I would like to make sure SRHQ would be the first rule of the hierarchy to be applied, and perhaps store by region would be the next one, and the company would be the last one. So you take a look at this one first. If it doesn't match it or is not going to be suggested, you can use another one, so forth and so on. This basically assigns the precedence for all the rules. However, you can break it up by clicking on the policy rules type parameters, and that automatically gets inherited here. Like for example, if I go to category access policy rule, you could say, I would like to make the company to be the second one, whereas this one automatically has the previous one that has been inherited. On the catalog policy rule, I can basically make the company to be at the top. This is again one of those bugs, don't worry about it, that it shows it twice, but it's going to be okay. So it actually shows the companies at the top, SRHQ at the bottom, etc. So you can define which precedence for each rule is going to be applied. When I click close, that means the main account is mandatory and has to be linked to an account structure, and without it, you won't be able to enter any data or validate any data. Nobody says that the main account should be the first segment. Should be any other segment of your choice. Like for example, I can have a department first, and then actually go and select the main account, which is the only form shows the main account alongside with the rest of the financial dimension, only and only in account structure. So now I have it, and I can use it. And as a matter of fact, you cannot have a blank value for the main account. Must have a main account. Here, I could basically say, you know what, move the main account to the left or to the right and actually adjust these values. And as a matter of fact, one legal entity could have so many different account structures. However, first rule, one main account can only be tied in to one account structure. Rule number 2, if you are going to combine multiple account structures, the sequence of segments should match. Like if the main account is the first segment, the main account in all other account structures that are part of the same legal entity should be the first one as well. So forth and so on for the rest of the segments. I can create a check right from here too. Like for example, system automatically knows what would be the next check number. Maybe you don't want to start from here. Maybe you would like to start from 5,000 and generate 2 more checks and click OK. You have complete freedom to do so. Therefore, there are some missing checks here. Now let's create a check again and system automatically sees the last number. But again, that would be something that the end user should identify, like from 4018, let's go ahead and generate 20 checks. See what's going to happen. System automatically generates a bunch of checks, so you can carry on and have as many checks as you want. As soon as there is no conflicts, system allows you to create it. Otherwise, it just stops at that moment. Why do we have to identify these checks? Because the system should know is a fixed check and you have available checks to be able to cut. If you don't have it, then you won't be able to use that check number. Whereas if I go to my second bank, which happens to be the payroll, I can go to the setup and take a look at the check, and actually happens that I keep this as free. And in this scenario, the check number is irrelevant because I can set up any check numbers the way I want. So I don't have to set that up at all. However, either way, you have to set up the check layouts. There's a new concept, they call it electronic reporting, and I'd like to have your attention here, which is outside of the scope of our conversation at this time, and it's a bit more advanced. If I go to organization administration, there's electronic reporting. Without having any customization, using XML elements and schema, you can convert series of different values into a different form, and as we discussed way early, I can of course override this value and make it round 200,000 euros, let's say. As you notice currently, if I go to the validate, I can simply see the journal is okay and there's no problem with it. And as a matter of fact, I can post it. But let's go ahead and take a look at the journal again. That's the name of it. The journal control for this is ready to go. I could say add a control. For which legal entity? Any legal entity? Or my own specific legal entity. The reason you have the company account here, because if you recall, within the general ledger, you had the global general journals here. So if somebody from another legal entity would have created this journal, they wouldn't be able to post it. So here on the journal control, you could specify what legal entity is going to control everything. I could leave it as it is, or I could just dictate it towards this specific legal entity of mine, which I'm working with. Whereas the use tax payable, it depends if you are based on the United States or not. If you're not based in the United States, you must indicate the use tax expense account, which we have already talked about it. But if you are in United States, then you keep track of it a bit differently. So it's just based on the regulatory features and mandates by a particular country. This is how much I had to pay. This specific field is acting as an offset of the use tax expenses to calculate to see how much monetary value the vendor was supposed to pay, but the vendor wasn't required to collect the tax, but your legal entity owed that taxes. When do we use that in the United States? Use tax payable is for resellers. That means I'm not going to pay the tax to the vendor right now. I take care of it myself later. Usually in the United States, we only use this when we are acting as a reseller. There is another field that would be appeared only and only if you're basically doing the consultation for Thailand, and they call it unrealized tax payable. We don't discuss that as part of our training, but this is only for those legal entities that reside in Thailand. Since this is based on Ireland, you don't see that property here. The settlement account is a collection of all of these values to see how much at the end you have to pay the authority. By taking into account the sales tax payable, receivable, use tax expenses, use tax payable and all that, you need to make sure that this account has been set up. Off of this, you can generate reports to see how much total monetary value you have to pay the government. I type in 15,004 and I talk about sales tax settlements as an STS. And again, that has to be as type sales tax. Going back here, I specify the 15,004. And now some authorities allow you to deduct the tax based on a cash discount that you may receive from a vendor or cash discount that you offer a customer. Let's talk about that a little bit. Assuming you have 30 days to receive money from a customer, and if they pay you within 10 days, you give them 5% discount. So they pay a bit less. Let's say if it's $100, if they pay within 10 days, you basically deduct $5 off of that 100. We don't necessarily care about this at this time, but some customers may do require that. Now, the posting, it requires an account type. And usually this account type is responsible for gathering the information to say from where are you going to take the fund out. Usually it's a bank account, but some companies, they use a liquidity account and then transfer the liquidity account into the bank account after bank reconciliation happens. But sometimes you just directly do it against the bank. And usually when you post the payments is where you receive the bank reconciliation and you clear up those transactions. And then you place that transactions, offset this account, and then post it against the bank. For simplicity, I just use the bank as a type. And let's say you're using the checking account in order to pay off of this bank. But again, even though you set this up as a best practice, you only post the payment journal when the vendor has already received the payment and deposited. Or if you basically post it immediately, you're assuming that the vendor has already paid. But what if the payment has not been deposited to the bank of the vendor? So you have to consider these things. We're going to talk about bridging posting shortly. There are so many different bank transaction types that are not necessarily as quite important for the payment setup, but you could right-click View Detail and create a bank transaction type. Remember, as part of my bank management, we talked about NSF. One of the transactions that the bank is going to send you information in case of not having enough fund available for the customer. They charge you a fee, which you should transfer it back to the customer. And usually NSF has nothing to do with the payable. It has something to do with receivable mostly, but sometimes you cut a check, the vendor realizes you don't have enough money, so they send you that fee that you have to pay, and then you can keep track of it and add it to your own account in order to make sure next time you pay extra fee. For this, you need to keep track of it, so I'm going to go and view detail, and I create a brand new main account for this. I put in 10,005, let's say, and I call it NSF. Again, the type of an account is something you should consider in regard to dealing with the profit and loss or balance sheet, which I leave it alone as this. While I'm at it, I create another one, 10,006, call it bank fees, like for wire transfer when it comes to electronic and EFTs. So I click close, I specify the NSF, and then perhaps I create another one and I call it fees, like wire fee or any other bank fee. You could have as many as you want, like for example, bank transaction type to be deposit or But if you take a look at the operation, take a look at the managed payments and checks, this check has been voided, but this check has been regenerated. For the voided and paid, you won't be able to delete any check. Let's give it a shot. If I say go ahead and delete 4002 to 4002, it wouldn't let me because you have to make sure that the status is only set as created, not to be paid or voided. You notice how to void a check, how to regenerate the check, etc. So the status is sent. Can we generate the check for bridge accounts? So let's go ahead and do that. I go to check bridging, I click OK. I go to the documents and I set this to be a screen again. I click OK and I click OK. It's going to generate a brand new check for all the checks that are supposed to be posted towards bridging account. Let's go ahead and save that and view it. You notice that this is basically showing me there is a first installment, second installment, and the third installment. For my demonstration's sake, even though I had a chance to pay over time, I'm not going to. I'm just going to take care of it right now. The value, they're all gone towards the bridging account. And now let's say we're going to post this. So by the time I post it to begin with, certain things are going to be different. The reason you will see the value of the trial balance changes immediately because we change everything to be synchronous or asynchronous. When I calculate the balances, the value indeed has changed to 60,000 and some change for domestic vendor account because the vendor invoices have been readily paid off. And as a matter of fact, if I refresh the open vendor invoices, those invoices that have been settled are gone. The only two invoices that are remaining indeed are those two invoices that you have not paid for. So these are open vendor invoices. That means you have not taken care of it. You have to pay them. I keep it as it is for future demonstration, but at this moment, you have already took care of the payments, so therefore everything has been indeed balanced properly, and you can see exactly what is going on. For domestic account, you have nothing left. You have paid entirely. By going through this demonstration, you have seen the daily procedures within accounts payable, distribution of accounts, charges for the header, for the line, and that concludes the accounts payable daily procedures. I close this, I keep the journal though. I click on Inter-Customer Payments, which has been around for a long time. There are many ways to deal with this. Number one, you can pick and choose the transactions of your choice and say which transactions would you like to take care of the business for. So for example, if I pick and choose this one, it's going to automatically find the proper invoice, marks it for settlement, and is waiting to say how much they are going to pay you. If there's any cash discount. Another way is to clear this up and pick and choose a customer of your choice. I have only one anyways. And by tabbing over, it's going to bring up the invoices for you. And you could specify which one would you like to work with. You have to click and see the check mark, not highlight it, and mark for selection. Automatically brings up the amount for you. If I also select this one and say mark for selected, it's going to allow you to deal with that as well. So if I choose both of them and say mark selected, it's going to do accumulation of both results. This is easy, obviously, but the situation happens when you receive a partial payment. Like for example, let's say you have one line $3,500, another line $540, and you receive just a check for the amount of 1,000. So how do you want to associate this with these two lines? Well, one way is to literally select this and mark as selected and see what will happen. Is actually showing you that the amounts to pay is 540. So obviously the remaining of that becomes a credit against the customer. If I don't do that though, if I clear this up, and let's say for the customer of my choice, I wanted to have amount of 1,000 to be set against the first line and mark as selected, you only pay $1,000, but you still owe $2,586.50. What if I wanted to have a policy to say, should I pay for the largest amount or smallest amount, or how do I distribute things like that? So let's clear this up. And now it's time to go to the accounts receivable parameter. And then the question here is, the journal that you originally had on the general ledger voucher, should it be the same? Is it? So you don't need a number sequence. Should you create a new voucher for each transaction date? Then you need to have a number sequence. Should you create a new voucher for each transaction? You need to have a number sequence. Of course, you could create as many as number sequences as you want. I'm just going to pick and choose whatever the system has generated for this legal entity. The accrual basis could be based on fiscal, based on calendar, or based on allocation key, which we focus on the calendar right now. And since this is yearly, you could just say 2 years, or you could say monthly and say it's 24 months, and then change the post transaction to a month. But there are some additional fields that you need to consider. This would be a demo for bases, obviously. But as you notice, again, you have active, you have date interval, and then you have the sources. Let's first talk about the sources. That means, where should I look at the posted transactions? If you go to the bases, and if you do indeed have intercompany relationship too, this form gives you capability to pick and choose the company of your choice or legal entity of your choice. And based on a particular account, which could have a source criteria, could be a range of accounts, or could be any account, or could be a specific account. Or if you would have come here to the financial dimension, you could have seen the list of not only those financial dimensions that are indeed made available in account structure configuration form, but also the advanced rules as well. As a reminder, I'd like to duplicate this tab and go back and show you that specific form. Now you know exactly how everything gets connected to each other. So if I go to the configure account structure, if you remember for SRHQ, I had only 3 segments: department, cost center, and US logistics. And as part of advanced rules, I had retail, which consists of retail channel, terminal, and worker. So because of this, you have all of these dimensions. But where do I get it from? As you see, it says that this budget transfer violates the budget transfer rule. It would basically tell you that you have an issue. Why? Because if you recall, as part of my previous example in regard to setting up a budget, on the budgeting parameter, we have turned this option on. You have to have a rule. I'm turning it off because I'm not going to use any rule, and I come back in here and I continue. So let's say from the same account, department 023, I'd like to bring in 500, and then I add an additional line. You'll still get that warning because when you created it, it assumed that the budget parameter had this turned on. But again, unfortunately, the cosmetic issues, it keeps giving you the warning, but you're going to be fine because I've turned it off. So if I come back here and pick and choose department 025 and bring in an additional 700 to this department, then I can do a transfer. The catch here is the amount has to be negative. If you want to take things off of that specific department, you have to make it negative. Otherwise, you're adding more money to departments. I'm going to save this. You're good to go. Everything's ready. What I'm doing, I'm deducting this much from this department, this much from this department, and adding it to be exactly 1200. Again, workflow is required, but I'm not going to demonstrate that. You have already seen the effect of it. And now indeed I perform the transfer. As soon as this happens, if I literally apply the parameter one more time, now I have more money, $1,200 more than what I had originally, because that's how much transfer I've received. So I've already created a few and I'm just going to use them. Do to, do from, that's a debit account. Therefore, if I am paying something to USMF, it should be due to. And for the credit, obviously I do the same, but the other way around is due from. That means either you can make the credit to be the debit or debit to be credit. It really doesn't matter. I'm debiting, like increasing my bank account, let's say, is due to USMF. I borrowed money from them. Or if I wanted to pay them back, that means I pay that USMF later, so it's due from. The destination company, based on my explanation for the demo, is USMF. And as you notice here, the USMF is going to draw information from chart of account that is associated for USMF. So I do the same thing. For the debit, I said due to, and for the credit, I said due from. However, there's a journal requires for intercompany accounting. They have a bunch of journal names already set up in this demo data, and happens that for intercompany they have already one anyways. They call it intercompany journal. So I pick and choose this, but just for information, this is as type daily. Now while we're here, let's continue with our discussion in regard to centralized payments. Like I said, theoretically, one company like GTL could have sent an invoice to the main account of the centralized payment ideology or your account, doesn't matter, which is internal for that country. Let's say I even invoice a specific company as part of this specific organization in a country, and then they can either internationally or nationally, doesn't matter, using the head office, let's say, then I can assign this specific company at the head to pay for this invoice or even accept the vendor invoice. Because of it, as I explained originally, you needed to specify these policies. Like in regard to say, how would you like to depreciate the value of this asset? Why? Because there are so many reasons for it. They are used or they don't worth as much because you have consumed so many of that. There are so many reasons. So therefore you need to depreciate the net value from the asset. That impacts your government documents for taxation for property tax. Government charges them less for the property tax. Or the bank doesn't take those assets as serious as they should, in other words, when they want to analyze the financial strength of the company prior to issuing the loan. This theoretical subject matter is important in order to understand exactly why do we have the fixed asset and how do we set it up properly. Sometimes you renovate your asset, therefore you need to basically add value to it. Increase it. Like for example, if there is a building, you may want to perhaps repaint it or maybe redecorate it. That would be asset addition. Certain assets, however, they are being governed by a specific authority to say, no, you must depreciate it a specific way. So then you have no other choice for that type of an asset. Only go with whatever the government asks you to depreciate. They don't give you a choice. When they give you a choice, needless to say, you could indeed change the depreciation profiles based on your depreciation calendar. Some companies may do that, which we're going to get into the details of it as I start the demonstration. However, certain assets you cannot depreciate at all, depending on the law, like land, or perhaps an old bottle of scotch, or art, maybe painting. Those type of things you're not supposed to depreciate or you don't want to depreciate. So you need to say, should it calculate the depreciation or not? There's so many reasons for it, because some assets, the older they get, the more expensive they become. Having said that, by going through that introduction, now let's see, how do we really manage fixed assets? Within my legal entity SRHQ, I like to show you how to set things up before we carry forward into the system. First thing I like to do is start with the fixed asset management workspace. And as a matter of fact, right from here, you don't see any information whatsoever. But the reason I brought it in, because later in advanced courses, you may want to get acquainted with Power BI and literally connect your Power BI into this dashboard in order to analyze the data in your legal entity, not only in fixed asset management, but for most workspaces, in order to have a captivative reports to the business analyst. There are advanced courses that allow you to hook this up to Dynamics and gather the data. And of course, dealing with the Power BI is a separate course on its own. But as you notice, I don't have anything. As a matter of fact, right off of here, I don't have any fixed asset in order to take a look at the valuation of it or books or details of it. We come back to this later. But right from here, you can start by going through all fixed assets. And that was very similar to directly go to the menu option, going through all fixed assets by clicking on this menu item, which gives you this specific form. So let's start by creation of a brand new asset. As you notice, the fixed asset group is rather mandatory. If I basically click somewhere else, you notice that the fixed asset group is mandatory option. Since I don't have anything, I now demonstrate that it's required to have a fixed asset group first before you have an asset. I right click view detail. And for my demonstration, I'm just going to create one group, but imagine you could have multiple groups, like group of computers, maybe lands, vehicles, you name it. For this, since we probably continue with the distribution and trade series of training, I assume that these are my machine, that's a fixed asset group, and that would be for CNC, computer numeric controller for SRHQ. We need to, let's say, buy a CNC machine. The type of an assets are usually tangible. That means you can feel and touch it. But intangible assets are those assets that are non-tangible, in other words, such as patents, intellectual properties, ideas. Financial is obvious, like bonds or money in the bank, etc. And then land and buildings, obviously, it tells you what it is. Can be also controlled. If you recall, by switching to a different tab, as part of our accounts payable and receivable, we created a few charge codes. And as you noticed, the accounts payable compare purchase order and invoice charge code is set to be yes. The reason for it is that the invoice validation is turned on. If I turn it off and save it and go back to the charge code form and refresh the entire browser, you notice that specific slider bar is no longer available. It's gone. If you do turn it on, then you can benefit from these match charges and all. So if I save it and refresh the entire browser again, the charge code is going to indeed have a brand new slider as a yes and no. Maybe you would like to say, don't include this charge as part of invoice validation, or do include it. Would you like to match the charges with a tolerance less than or greater than 0, let's say? And then, as far as the confirmation of the product receipt, let's carry on by creating a prepayment invoice. It's very important to pay attention. As soon as I click on this, the recommended value is going to say, usually you should only pay for the product receipts that you have received, which makes sense, but not in the case of prepayment. You have to select no. For prepayment, you select no. And as you see, as soon as I say no, it's just going to bring the value of the prepayment, not the total amount. And I specify a particular invoice number, which is again due to the localization. Some of these values must be numerical. Some of them may be alphanumerical. Really depends on localization, which I'm not going to get into the details of it. And then I do the posting, because automatically this is already passed anyways, because you're not matching it to anything but the prepayment category. It's a category. I click post. As you see, it says is not confirmed. That's one of the other cosmetic glitches. If you recall, I changed a few things here and there. I added a brand new prepayment, but I did not confirm the purchase order. But unfortunately, the invoice button was enabled and you have a pending vendor invoices. But receive works properly because it's faded. Prior to report 1099, you have to turn this option on for the US-based company. And if you have a requirements to see they're required to send a W-9, you have to check for that. And you can't do anything until you have received it. Otherwise, you don't do business with them. Sometimes you don't want to check it, but you want to make sure you have received the W-9. And what's the W-9 anyways? It's a form that guarantees that this is your federal tax ID and is the official form by government. So I can check for it. I can say if I've received it or not. Yes, I did. Okay, fantastic. And this is my box. And as a matter of fact, the MISC-07 is the box that I'm going to do a reporting on. Now, if you take a look at the vendor here, you have to also specify vendor state tax ID, because this vendor may indeed operate in a particular state, such as, for example, California here. And then the state may give them a specific tax ID or corporate ID, for example. And you could say that would be employee identification number for them and remove